What's up, everybody? I hope you guys will be doing good. So I'm back with another beautiful ICT trading strategy. This is also known by ICT's son's trading strategy. If you have seen his Twitter, he shared this strategy a few months back saying this is the only strategy that his son uses. But in this strategy, ICT combines the 15-minute time frame with the 30-second time frame or sometimes the 10-second time frame. But most of us don't have a premium subscription. So in today's lecture, I will teach you how you can effectively use it on the 15-minute and the 1-minute time frame. And believe me when I say this strategy alone is enough to get you funded and to quit your 9-to-5 job. You don't need any other strategy if you master this strategy alone, okay? So make sure not to skip any part in the middle because then you guys miss important points and then I receive your DMs asking for further explanations. So first I will explain the terminologies, the basic terminologies that I'm going to use in this lecture, as some of you would be totally new to ICT concepts, and then we will dig deep into the strategy. So what are the terminologies that we're going to use? First one, and you would already be familiar with this, is the fair value gap. So what is a fair value gap? Let's suppose this is a bearish candle, okay? Then let's suppose we get another candle and then a third one, this bearish, and you can see that the gap between the bottom of this candle and the top of this candle, there is a gap. Okay, skip this one, okay? The gap between the bottom of this and the top of this is called the fair value gap, okay? You would already be familiar with this, but still I will explain it as some of you might be new to ICT concepts. And let's suppose this is a bullish candle. The price is going up, okay? And you can see again we got a fair value gap between the top of this and the bottom of this candle. And this gap is called the fair value gap, okay? And we can also get something like this, like let's suppose the price is going up. This is a bullish candle, okay? Again, we got another candle. And then we get a third candle, which is red, which is a bearish candle, but still there is a gap between the top of this and the bottom of this candle. So this is also a fair value gap, okay? So whenever I say fair value gap, I mean this gap, okay? So this was the first thing, the first terminology that we're gonna use. Another thing is swing high and swing low. So what is swing low? I suppose this is a bearish candle, okay? Then we get another candle and then a third one, something like this. So you can see this middle candle, this makes the bottom, okay? Not these two. So this candle makes the swing low. This point will be our swing low, okay? You can also get something like this. Let's suppose a bearish candle, then another one that makes the low, okay? And then a third one, which will be green, but still you can see this candle made the low. So this is called the swing low. Now what is a swing high? This bullish candle, another bullish. Let's suppose we get another one also. And then a bearish one. So you can see this candle made the high, not these two, okay? The central candle, this candle made the high, so this is our swing high. You can find it everywhere on the chart. So I will show you these fair value gaps and the swing highs and swing lows on the chart. You can see this was the bullish candle and then we got this bearish candle. So you can see there is a gap between the bottom of this candle and the top of this candle. This gap is called the fair value gap, okay? You can find it everywhere. You can see the gap between the bottom of this and the top of this. This is also a fair value gap. Now what is a swing high and swing low? You can see this candle, this central candle made the low, not these two. So this is your swing low and this is your swing high. You can see this central candle, this made the top. This is a swing high. Now this is not a swing high because there is another candle at the side which makes the high. So this one is not a swing high. The swing high is this one, okay? This makes the top and not these two candles at the side. So this is swing high, this is a swing low. I hope this is clear. Now we will identify the swing highs and swing lows on the 15-minute time frame. You can see this is the GBP USD chart, the 15-minute chart. You can use it on anything if it's indices or any other currency like Euro or USD. So you can see that there are some swing lows, this one, okay. There are some swing highs like this one and this one. We will discuss this recent area. I will give you two examples, a bullish example and a bearish example, okay. So the first thing that you need to do is you have to identify the 15-minute swing high and swing lows, okay. Identify 15-minute swing high and swing low. I will increase size. This is the first thing that you need to do. So this is our swing high. You can see this candle at the top, not the two candles at the side. This is our swing high. We will identify it, okay. This is also a swing high. So we will identify these areas. Here you can see this is a swing low, okay. Now another swing low. This is also a swing low. So this is the first thing that you need to do. Now what will be the second thing that we need to do? We identified the 15-minute swing highs and swing lows. Now we will look for sweep, okay. We will look for sweep of previous swing high or swing low, okay, of previous swing high or swing low. So I will show you this on the chart. First we identified the swing highs and swing lows. Now we will identify the sweep of the previous swing high or swing low. So you can see this was a swing high that we identified, and here you can see we got the sweep of this previous swing high. What do I mean by sweep? Sweep is when the price goes above this previous swing high, or if the price goes below previous swing low. You can see this is also a sweep, okay. So I have already teach you the strategy on the 4-hour time frame, but we will use it on the 15-minute. It's a bit different, okay. It's not exactly like that. So we did two things. We identified the swing highs and swing lows. Then we looked for sweep. You can see this was a sweep and this was also a sweep. Now what's the next thing? We will wait. Let me connect it. We will wait for the price to close below the previous swing high or close above the previous swing low, okay. You guys have to note these things. The first thing we did, we identified swing high, swing lows. We waited for the sweep. Now we will wait for the price to close below the previous swing high or close above the previous swing low. So let's discuss this one now. We will wait for the price to close above the previous swing low. So this is our previous swing low and we got the sweep. Now we will wait for this price, this candle to close above it, okay. This will only be valid if this candle closes above this line. This won't be a valid structure if this candle closes below this line, okay. This will only be a valid structure if this candle sweeps the previous swing low and then it closes above it. Same is the case here. This will only be valid if this candle, you can see these two candles, this sweeps the previous swing high and then it closes below it like this. You can see these two candles close below this line, okay. First we will discuss this bullish example. We got our three things that we were looking for, okay. We got these swing lows, then we got the sweep, and then we got the close above it. Now what we will do is we will shift to smaller time frame, which is 1 minute for our entry. Let's see if we get any entry on the 1 minute time frame. So what you have to do is on the 1 minute time frame, once you get the sweep and a close above it, you have to look for fair value gap, okay. The 1 minute fair value gap, this was the area of interest, so we will look for any fair value gap here. So you can see this was that fair value gap, okay. Once this sweep happened, the price closed above it and then we got this fair value gap and the price retested this fair value gap. So we will get our entry here, okay, and our stop loss will be below this swing low, okay. in case you got the fair value gap here, then this fair value gap will be your entry. But in this case, we got this fair value gap here. Okay, this will be your entry point. And what will be your target? You will target 4RR. Okay, with this strategy, you will get 4RR. Let's see if we got that. Okay, so here you can see this will be your target. Now, let's discuss this bearish example. You will shift to again 15-minute time frame. Let me show you this on the 15 minutes. So here again we got the sweep. Okay, then we got a close below the previous swing high, and these were the things that we are looking for. Now we will shift to smaller time frame, which is 1 minute, and let's see if we got that fair value gap here. So here you can see that we got the sweep, then we got the close below it. Okay, so once it closes below it, then you will look for any fair value gap on the 1 minute time frame. There was a fair value gap here, a smaller one, but we didn't get an entry. Now we will look for another fair value gap. There was one here. Okay, but we didn't get an entry again. Now there is another one here. So this will be your entry point. The price went above here, and this will be your stop loss. The reason ICT Sun uses smaller time frame, because he gets fair value gaps filled here on the smaller time frame, like 10 second or 30 second. You can see in case of the 1 minute, we got our entry at this point, not above here. So if you use smaller time frame like 30 seconds or 10 seconds, you will get an entry around this area. So let's see what will be your target. In this case, you can see that 3 of your fair value gaps, 1, 2, 2 of your fair value gaps didn't get filled. So you will keep the target small, like 2RR. You can see from this point, on this point, this is already a bigger target, or even you can use 2.5. Okay, so in case you miss some fair value gaps, like this fair value gap doesn't get filled, and again this one, then you will change your target and you will not use the 4RR target, because you can see you missed 2 fair value gaps here. So obviously you have to lower the target, and personally I use 2RR, not 2.5R, because you can see that this is a big enough target. From this point till this point, you can see this is 18 pips. So when you miss fair value gaps, you have to change the target. Let me show you another example. These were the recent 2 examples. Now we will use some more. Okay, so let's see what we got here. So this is again the previous swing high. We got the sweep and then it closed below it, so there will be some fair value gaps, and you can see the price went down. Here you can see the previous swing lows. Okay, the price swept it, went above it, and you can see the price went up. So you will find such things everywhere. Okay, most of the times your target will get hit. Sometimes it can give you some loss. You can see again here, you can see the price swept this and then the price went down. So most of the times if you take 10 trades, 7 trades or even 8 or 9 trades will give you profit. You can see you find these things everywhere on the chart. So if you use it on 1 minute time frame, you have to be careful. If the first fair value gap gets filled, then you can go with the 4RR target. If your first and second fair value gap doesn't get filled, then you will lower your target to around 2RR or 2.5RR.